Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. Please be aware I am streaming from Costa Rica, and today I have an extremely unstable internet connection. So if I drop out, I will come back in, but the time before it resets can be anywhere from 1 minute to approximately 5 minutes. So if I drop out either in Discord or on YouTube, please be patient. The stream will come back, but I think it's a function of how many monkeys are swinging on the cable, not to mention power fluctuations. This is probably the worst I've seen it since I've been down here this year. So hopefully things will be reasonable, but please be advised if I drop out, I will come back in and the stream will continue. Thank you. Let's get on with it. We have a lot to talk about today, and notwithstanding the interruptions, let's do the best we can. And again, I ask for your indulgence and patience. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. So let's get going. First things first, let's talk about something called context. And context is one of the most misunderstood elements to trade planning. And what is a trade plan? Well, a trade plan is all about anticipating market mechanics. So let's take a look at the higher time frame. Let me try to get some things working here. Hold on. This is Investor RT. It is my higher time frame software. I'm going to try to grab this and make it a bit bigger so you can see it. Hold on. So what happened yesterday? Now, if you remember yesterday, we were on the long side yesterday. This is what we call a micro composite, and all it is it's a distribution of behavior. So swing low to swing high. And what we do is throw a volume profile around it so we could see where the high volume is and the low volume is. And as you guys know, in distributions, outside edges of distributions have low volume because it stops. High volume typically around the middle, and then low volume. That's what these red-green lines are. So if I fall out of a distribution, I start another one, and then so on and so forth. You can see red, red, green. Okay, red, green, red, and you see how it. So those are distributions. Now, that's inside of this distribution. So that's how you guys think of time frames in the Trader Lab or in the volume world. It's really distributions of volume. It's all the same. Consolidations are really volume-based interactions between participants. Now, here's what's interesting about yesterday. This is yesterday. First of all, this is the highest volume in this whole distribution before this day. So this is your retail price. So on this day, we open and we test this area. Now, there's no precision. And if it's too low, we can go up. That's what put us on longs. Now, what else do we know? We rejected here, so there's buy stops here. We had sellers here. So let's take it a little further. Longs are here. Stops are under here. This day, we open, go higher, get to this outside edge. Sellers come back in. Take the sell stops out under here, and down we go. It's the end of the world, Lewis. Then we open, we test up here, which is a high volume node. Remember, retail, if it's too high, we go down. Oh, it's definitely over. And here's the low at the outside edge, going to zero, right? Well, of course, maybe. What happens here? Gap, test this price, too low, and then what's above us? Stops, stops. That set up targets here, here, and here. And if you followed the stream yesterday, this was all laid out. And of course, by the way, these streams are available to everyone in the Bookmap Discord Trader Lab community. These are not made public, typically, but you never know. So what happens today? Market is long. What's under the market? Sell stops. See how this might work? In rotational trading, what tends to happen is both sides get equally abused. Can you see the abuse? Not only can you see it, but can you sometimes feel it based on your trade plan? Trader Lab is based on understanding how the market works, why it does what it does, and how at times you might get in alignment with it using structured trades. In addition, when you incorporate a high-tier order flow tool like Bookmap, it helps you see inside the participant behavior, and you can really zoom in as, pretty much as you want. So here we go. So we open here. This was too low. We don't know. This is part of a distribution. And remember, nobody predicts anything. So let's get off the I need to be right and I'm going to predict. Nobody does that. Unless you do it and then come to Trader Lab, show us how you do it, because this is not a business of prediction. It's a business of maybe. So let's see if we can get things working. Now you're going to see a lot of holes in data here. And remember, if I drop out, I will come back in. And if you're visiting in YouTube, I'm going to ask your patience, but another link will pop up or the stream will just continue, and just please, follow the yellow brick road. And please give a like at the moment, of course, if you like what you see. Gives me a little encouragement to continue doing this. So, and remember, the Trader Lab's for everyone. There's no cost. There's a link in the bottom of YouTube if you're interested in joining a community of serious traders who've come together to leverage their collective experience. And these trades that you see here are based on structured trades. And a structured trade is just really a process that is repetitive that gives you a statistical edge. The outcome is always random, unknown, and the idea of creating certainty and predictability does not exist in this specific business. And why is that? Because we're in a gaming business. The model for gaming is the way casinos operate. They only play games that have an edge. They don't make them up. They don't get emotionally attached. They do pay to gamblers, and they will give you a cocktail and a ticket to the buffet. So that works. So even though they're paying the gamblers, they only play games with an edge. That's what structured trading is. Only interact with the other participants where you have a statistical edge. And yes, you will pay the other side. Fact of life. All businesses have expenses and overhead. So it isn't about being right. It's about knowing where your edge is, and you measure yourself by following your plan and only interacting when that edge shows up. That's it. You can make it more complicated, but complexity is really a search for certainty and fighting fear and this thing, a need to be right and need to know. How about, what do you do if you're in a business where that doesn't exist, but you're still going to work towards it because that's your psychological need? I'm posing the question because we all do the same thing. Our behaviors are really governed by primal instincts, and, fight and flight works well out on the tundra with the saber-toothed tiger. But in this business, we're continually 100% of the time in an environment of uncertainty. What does uncertainty trigger in us? Fear, risk avoidance. So we tend to move in a direction, since we believe, we don't understand, but we believe we can solve that by creating certainty, and that ends up more indicators, more time frames, more of everything. More actually creates less. It doesn't create more. It's actually very counterintuitive. You can learn this in Trader Lab if you're interested in that. Oh, you're welcome, Red Hill. I appreciate that. Okay, and thank you to Bookmap Support for being backup. Remember, if you're in YouTube or even Discord, this stream will most likely go down because of problems here in Costa Rica with the internet at the moment. I've asked the monkeys to kind of cut it out, but they tend not to listen to me. So let's get into the opening trade. So gap, let's look where we are. Yesterday's low, RTH open. Gap lower out of yesterday's range. I'm going to give you some statistics. Grab a pen and a piece of paper. Remember, past performance not indicative of future results. You got to vet everything for yourself. So lower outside range. Here's some statistics. Getting to the overnight volume point of control is an 85% probability. Where is that? Right there. Don't forget, we're opening here. 85% probability. Getting to the overnight mid, a 68% probability. Where the heck is that? Up there. Getting to the first hour's high, a 67% probability. Where's that? It's going to be there, but we don't know that at the time. Getting to either the previous high or low, a 64% probability. Getting to the previous low, a 64% probability. That means closing the gap, right? And let me see what else you got. Roughly a 32% probability of taking out the previous point of control, which is above us. And there's more, but that's enough. Okay? Now, in TraderLab, you have statistics and probabilities of the overall lay of the land, but there is going to be even more. And that is, now we know those statistics coming in. Now what we need to do is overlay our trades on what we know might happen, not what will happen. And since as day traders, we can't predict anything, let's leave prediction to going to, what do they call it? Fortune tellers, right? Well, they predict everything. The magic 8-ball, we had one on the trade desk. That was as good as anybody's prediction, let me tell you. And most often, and I like to tell this, we literally had one. The problem was sometimes traders would throw the magic 8-ball. So fortunately, they weren't too expensive at the time. But typically, it would say, is it going up or down? Should I get long or short? And it would say, ask again. Yeah, great. So RTH open. 8:30 Central Time, my time. Now, I do have gaps in the data. It's going to throw things off a little bit, so please forgive. Unfortunately, you can't refresh Bookmap because we're using MBO data, which comes directly from CME. That's called market by order, and you can't refresh it. So it's either here or gone. If I do a refresh here, I will lose all of this MBO, and I think MBO is very important. The MBO is a stop and iceberg detector, and also I have other things, absorption, sweeps. All of this is part of order flow methodology and can give you additional insight. In fact, I should mention that there's a sale on now. I should mention these things so you don't miss it. 50% off the MBO package, and this has been ongoing. It says starts today, but it's still current. 50% off the first month. So if you ever wanted to use something like this, you might want to check that out. Go to bookmap.com if you're interested in all the deals that are currently happening. So here we go. This is called developing volume point of control. Now we have a couple of things, right? First of all, ETH low, which is right, happens here on the open is a high probability. Also the gap. What do we know in a gap? Well, why is it going down? Let me bring you back to something that was at the top of the stream. And remember, if the stream drops out, forgiveness, and I will come back. The market went down the previous day before yesterday. Buy stops were here, and this was our upside target. This was a target, this was a target, and if you remember the stream, 66. Well, we didn't get there, but we got above the buy stops here and here. They become buyers. Market is long. What's under yesterday's low? Sell stops. What do we do here? Take those guys out. Thanks for playing. This is when your broker sends you a gift basket. Now we get shorts. What happens to the shorts? Well, if we don't go down, what do? We now squeeze the shorts. Isn't this a beautiful thing? Market goes up to go down. Market goes down to go up. And how, when, or whatever, part of the joy. So that's what we know. That's all we know. Now, in the TraderLab, we don't know. Right? So it's not knowing. Remember, this is not a business of knowing. This is a business of maybe. So right here, RTH open, this is called the variable high volume node. Now I made these up. I started doing this. I started trading in 1980. We didn't have a volume profile. We we barely had anything. We had an abacus and a stone tablet. And there was no, having a live data feed, which was just quotes, that was about as deep as it got back then. So what I did was I actually drew charts by hand. And just saying, it's not that material to this. But I started out without tools. And then as tools developed, and then we had classical bar charting, that's what I learned initially at CME. classical bar charting, and that's open, high, low, close bars, RTH. We didn't have an RTH. They were called daily. There was no such thing. So it was just open, high, low, close. That was it. High tech was a moving average. So what is this? Right here is our retail price. I see my sellers and the market goes down. Developing volume point and control is here. But this is representing is a retail price. Think shopping. Well, if more volume is here than here, why did the market move away? Well, we know the market is long, right? And we know if the market comes back here and the shoppers go, I'm not paying that, then we might set up a short and go lower. That's what we know. We might. I say maybe because that's about all you got. This is a Trader Lab structured trade. Now, there's another piece to this, of course. Is it a short for you, or is it just a counter rotation? What were the probabilities and statistics? Market was long. Take out the longs, take out the stops. Thanks for playing. Get new shorts in the market. And we have high probability statistics above us, and we can do anything. Let's remember that. So right here is a potential short, and we're looking for the sellers and to take out more of these stops. So let's just look. This is called right here. So what do we have? Too high, retail, come across and either squeeze these guys out or go lower. Now, let me tell you something else that you would know if you're in Trader Lab. Opening swing high. What's here? Remember, longs getting taken out. Buy stops are going to be right above this high. I'm going to label it. It's right around there. Opening swing high, I believe. Close. My data goes in and out, so I'm fine within a couple of ticks, Thumb up, please, if you're visiting in YouTube. Lets me know that I'm on point with this here. So what I know is short, but I also know stops are here. And the variable high volume node is here. So I got buy stops here, and I got new shorts, and I got long liquidation. This is what I know. That's as deep as it gets. So let's watch. Pull back to VWAP. I have a variable high volume node over here now. I got to label it. I made this up. The whole idea of this high volume is what creates it. And it doesn't mean it's a wall. None of that exists in trading. What it means is it's an area of behavior. And then what we want to try to do is think, what's this? Too high? New retail price. Now back up here. Maybe too low. Too high. Resistance, support. Break below it. Now, what was support? It's over here. Where's my outside edge of a distribution? Remember, I was showing you in a higher time frame, low volume nodes, high volume nodes. It's all the same. This is called fractals. Buyers are here. Let's just see what it does. No clue. Watch. So right here, going lower, break high. Right here, this is resistance. Break low, support right here, no clue, break high. Why is this important? Opening swing high. So now what are the possibilities? Let's look. This can become right here an entry on the long side, and this right here, let me mark this and forget to do this. I do forget, because it's multiple moving pieces. Now, the idea of this is not that you're taking all these trades. The goal of the stream is to show you market narration and where it changes. Remember what I know. Market's long, sell stops come out early, and I'm going to get these guys in this swing with the opening swing high here can get taken out. Then I have to see what happens here. Do I come back inside and it's just a squeeze and mean revert, or do I hold a level and then go towards my statistics, which are what? 82% probability to get here, right? Top of the stream. And remember, if I drop out, and I apologize for reminding you, if I drop out, I will come back. So right here, I get my opening swing high. Now, the possibilities are the following. Once I pick the stops, I can come back inside and mean revert, and I don't know which one, so let's not think about that. Or I can pull back here and potentially come back across and go up. So let's just see what it does. Where's support? Here. So here's what happened. Sell stops come out from the longs that are on the hook. Opening swing high is here. Squeeze these guys, this leg out. No clue. Come up here. Now what happens? Watch. Now, these are not necessarily trades you would take. These are trades you can learn if you vet them. You may not have a trade here. This suggests right here, and I'm using order flow and the opening swing, which was right above there. Remember, this was our first short potential. This is where the stops are for the shorts. I come up, I squeeze them out. Now, what do? I have an 82% probability above me. What do I do with this? Great question. Well, right here is micro high volume structure. I'm going to put a little line in here. Now, nobody has an answer to what will happen, but what do I know here? I know I have support there, and I just squeezed out the shorts. I can either, right here, I can pull back, go up, but this is now my resistance. So right here, I get selling. I have a seller here. Now I'm in order flow. I have selling icebergs up here. I have nothing going on here. I see my seller. Let's look at this little structure right here. Right here, I have a seller. Sellers are there. Sellers are here. Seller is here. Seller is there. Why you're asking me, well, how do you know there's a seller there? Because the market went down, and this is the passive side. I can't see them. I can see the icebergs. That's limit orders, but I don't see the limit order book. I can see them all the way over here, but I don't see their interaction because these are limits. If they don't get filled, then they don't care. So I'm looking for the buyers, right? Where's my buyers? Right here is micro high volume structure. This is a little auction in a fractal, and you could see it right here. Now, when this is the high volume right there. So I have no clue right here. When I break here, I have a clue. Why? The buyers are here. This seller was absorbed by the buyers. See the buyers, here's the seller. Sellers are there. Seller is here. Why does it make a new high? Because the buyers absorbed this guy. So where are the buyers? They're over in here. Where are the sellers? Now they're sitting here. So buyers, sellers, microstructure, break low. Warning Will Robinson moment. Sellers are here. Sellers are in control. Sellers are here. We're under this buyer. We're below this seller. We're below this seller. Where's my buyers? They're there. Under, come back. Shootout. Sellers are here. Buyers are here. Seller is there. Right here is really the moment. What happens here? Buyers are here. So what I know is the following. And again, it's not anything more than what I know based on order flow is I got sellers up here. I got my high volume there. And if I can't clear this, this is a language. What this is saying is I'm not paying that. It's a store or a fractal. And there's another term for this that you guys all know. It's called consolidation. So now you know what a consolidation is. It isn't just chop, 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 chop. It's what is happening. This is what is important to understand how the market works. What creates this? I know we go, oh, it's just chopping. No, it's not. And yes, it is. It is chopping, but why? You need to know why. Why? Because sellers are here and buyers are here. And inside of this interaction is the volume. And think of the volume like you're in a store and it's a retail price. If this price becomes too high, we can break away from it. Now, if I come back and check it and the shoppers, remember where the sellers are, go, I'm not paying that. Have you ever done that? Go shopping, come back to your store and go, they're out of their minds. and you leave the store. Buyers are here, sellers are there. Why are we below this buyer? Too high, maybe. So where's my short? Here, here, and where would my stop go? A couple ticks over here, or no trade. Watch. Where's my resistance? Now, this is microstructure. You can learn this in Trader Lab. I'm not saying it's anything anybody should do, but this is called a trigger. And the only thing that makes it really, and a trigger doesn't mean you do it. It means you interpret it in relation to everything else that's happening. The context, the opening swing high. I call this a stop pick. Once the short, remember how the market works in all time frames and fractals. The market goes down to go up. The market goes up to go down. The market goes down to go, etc. Right? So, and again, just I'm going to bring you back to the higher time frame, just so you can see why trading is fractal. That means it's multiple time frame, but the only difference between trading fractals or time frames is, other than like RTH, which is definitely time based, the rest of it is rotational based. Think Russian dolls. So what does the market do? The market goes down to go up. The market goes up to go down. The market goes down potentially to go up. The market goes up to go down, however it does it. So that's higher time frame. So what is going on here? Market goes down to go up. Market goes up to go down. Market goes down to go up, etc. Does that all make sense, guys? Are you guys tracking? And how are we doing in YouTube? Remember, YouTubers, if I drop out, I will come back. I'm in Costa Rica. Internet's been extremely unstable. So look where we come. This sets up a Trader Lab potential short. Now, this has a specific behavior called mean reversion. And I like to stress the word mean because outside-in trading is mean. Now, I'm going to take you into a couple other pieces here. Now, I'm in a very advanced process. Trader Lab is an advanced program. It doesn't start out that way in the sense of start out, and it is as you build. So you start like with a higher, call it a higher time frame or a broad stroke, and then you can zero in on microstructure. But it all builds on top of itself. This is not a 20-minute situation or a 3-month situation, and now you have an ATM in the basement. Let's be realistic. You're competing against some of the best minds on the planet. If you want to have an opportunity to be in business, you got to learn the business. This is a trigger. This is a test. This is a test. This is a test. Where's resistance? There, where would you short in Trader Lab if you have done the work? Here. 1 or 2 ticks here. Where would your stop be? Here, just outside. Is that something you can deal with from a risk parameter point of view? Now, you could also be selling it here. Short here, stop there. Short here, stop there. Short here, stop there. Short here, stop there. Or short wherever, stop there. That's structured trade. That's Trader Lab. Just saying. And where's support? Here. So this is a target. Or that's a target. Up to you. So let's watch. Scale, hold, trade management. Now, here comes something interesting. Stop sweep. I go over these in the Trader Lab. I've done a specific webinar on this. It's available to everyone in the Bookmap Discord Trader Lab library. It's long, and also 60 PDFs of structured trades. This is a stop sweep. Now, when I see a selling sweep, often, now the word often means maybe, no matter how you slice it, is if I see a sell sweep, I'm looking for a potential reversal. Let's see what it does. You with me? Trader Lab. And let's add a little more to the pot. What is this? Variable high volume node. What is the shopping experience? In a fractal, too high, What is down here? A fractal. Maybe too low. And I have to stress the word maybe because that's all you got. Maybe. So this is a location for a target or potential reversal. Who knows? And I'm going to say who knows because our job is not to predict. Our job is to observe and then understand potential. Not predict, understand. Right here is a target. And as far as I know, we're going to zero. Wouldn't you think that? I would. Now, let's consider what happens next. I get the sweep right here. So I have the following. Location. Anybody hear that term? That's from real estate. Location. I'm just putting a line here so you can see it. And it's a microcomposite low volume node. Where'd that come from? You're asking me. Come on, let's come back. That location right there. So we're up in this thing and we're down here around 60, 22-ish, whatever it is, right? Low volume outside, let me show you again, outside edge of a distribution. So outside edge. And right here, we can just come down here and then rotate. So that's a potential target. So is this, but who knows? Do you? I don't know. So I don't try to answer the question of the things I know I don't know. I only know what might happen. I can't tell you what will happen. So there's that low volume outside area. That is alignment. It's a suspect. So right here, going to zero, rotate, still going lower. This was my target coming down. Okay. And now what? Sweep. Warning, Will Robinson, watch for reversal or not. What did we have here? The opposite. Sell, long. Buy, short. Sell, long. See it? Sweeps. Another piece of the order flow. You can learn this. Now, this thing, I'm going to use the term clueless, not ignorant, clueless. Now what? That's pretty aggressive buying. Now, I'm trying to remember. I don't remember because my internet was going. You'll see holes in the data here. Where do we pull back? Here. What was that? Let's come back. What created that? Resistance. Don't you remember? Resistance. Resistance becomes support. Here. Long. If it's in your plan. Now, I'm just showing you structured trades. 82% probability we get there, remember? And just to keep it exciting, we have our gap. And you know, at the top of the stream, I gave you the probabilities, not the predictability, because that doesn't exist. So in trading, part of a trade plan is to know what you will do. You cannot predict what will happen. You can only anticipate what might happen. And then you either have trades that you have identified when they show up, you know what you will do. All this is before you ever put a trade on or even attempt to trade live. Or you don't have a trade here and you're just taken out of your short. If that was your trade, that's the end of it. Once we come across the range and you see this, then you know there's a potential change in behavior. So then you got to look at where's your locations. Do you get a trigger? Well, if we come back here, that might be a trade if you vetted it. Here's another piece of this. Let me show you. This gets more complex. So right here, we come across, remember, this was resistance. We were taking shorts against here, right? So, and this is also resistance. Once you blow through all of this, then it's the squeezeteria is on. Again, 82% probability, and also filling this is pretty good, the gap. So now you want to get long. There's your pullback. If this is a structured or vetted trade, what you're seeing here is a consolidation. Rotation, outside edge, location. And let's look at the profile. What we've done here is now we're doing one of these. Your favorite thing, consolidation. What's in the middle of the consolidation, you ask? Let's look. Volume. volume. So outside edge, another consolidation, and nobody knows where's this outside. I don't know, except I know there's support, and I know this was where I was getting short at the open, remember? And the opening swing and all that was there. So now I break above that and I come back to check it. It's all here and out here. So this is called mean reversion. This is the mean of the fractal. I know you're going to go, what is he talking about? Come to Trader Lab, you can figure it out. And here's my test. This is my long. Or there's another way to get in here. Let me show you. And again, this is advanced. Trader Lab's an advanced trading process. See the test? So what you have here is, this is an aggressive entry because you're trying to pick the outside edge. And you can if you get skilled. If you took along here, your stop would be under this fractal. What are fractals? Russian dolls. You know what a Russian doll is, Matryoshka doll. They're inside of each other. So what we are doing in Trader Lab is we're trading fractals inside of each other. So this is too low. This is where this trade would fail. Under this level, I know the mid and the VWAP is here. You could put it wherever you want. For me, kind of chicken. I don't like to throw dollars away. I know why this is created. And if I understand the auction, I can understand that this is the retail price that we have rejected. Remember, shopping. Where was it too high? Here. If I come back to what was resistance, isn't that support? Now, if I don't understand, or even I don't know anything here about this, once I break above the volume in here, the shopping experience, and I break, my support now is there. And it can fail as well as any other trade. So this is support, and out here is support. So if I put a trade on here, my stop's going to be around here. It's a couple points. And why am I going to take a long? You say 82% probability. So I have this, I have this. All these are potential longs. My stop would be under here, and my scale is here. Is everybody tracking so far? So you can see a short, you see a long, and you see what's going on. Now this sets up another short, but let's see if you have questions. How we doing? Hey, give a thumb up in YouTube. It helps me understand if I'm helping you guys. And the reason I don't call live trades, I will if I get to it. And there are streams that are available in the Bookmap Discord library that you're all invited to observe and download and do whatever you want, with 5 hours of real-time narration. If you're interested in real-time narration, that's where you need to come. But I have found, as an educator over many years, almost 45 years of doing this, plus mentoring many traders over the years, that you need to understand process before you, because if you don't understand why, then you're just, might as well just get that flight simulator and, do that. That'll be more productive. This is about why. Once you understand why, then you can build out process, and there are structured trades in Trader Lab to help you do that. Now remember, 82% probability and the gap. So if you're in the long, this is your trade to here, scale, hold. Now what happens here? Now I can't predict, it's not my job, I don't do anything. But I do know that if I get here, I can fill the gap, or who knows. So let's look at trade management. So if you got long, you'd get risk neutral up here ahead of this because of 82% probability. And for me, I'd still be looking for the gap fill here because of the probabilities, high probability. Why wouldn't you be going for that? So since I can't predict anything, remember, if you do, I want you to DM me, we'll talk. But in the meantime, support, resistance, and then this, okay? So right here, I have no reason to think it's going to reverse. But here's what I see. Now, I'm always following microstructure. Oh, we're getting a data latency spike, and things might be getting nasty. Don't go away if I drop out. If you're in YouTube, it will come back. So what is this here? Let's look at this. Micro high volume, counter rotation. What is this? Micro high volume, support. Now I'm taking down in fractal, resistance, support. As long as I'm above this, I'm doing all right. What's this? Support, micro high volume structure. Notice how this works. I'm taking you down into a place where nobody ought to go. And what's this? Resistance, here, because the sellers are here, and I know I got resting liquidity here, so I'm aware of this. So I got my high volume here. Let's just look at this. Now, this is not necessarily actionable. It's informational. What created this? Chop, 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 chop. Too low. I'm out of here. Retail price here. Too low. Rejected it. I come down here. What happened here? I tested it. Too low. I'm out of here. See you later. What happened here? Sellers were here. Sellers are here. Buyers are there. Sellers are here. Buyers are here. Sellers, buyers. I'm now in a fractal. I'm within a couple of points, and I'm narrating the market. What happened here? Sellers are here. Buyers are here. Notice where we test the buyers. These buyers are activated here. This is where the sellers are. And here's how I know. And I don't know what will happen. That's not part of this equation. It's what might happen. I know the buyers are here. I know the sellers are here. I see the icebergs. This is the stop and iceberg detector. Very cool tool. Very important part of the armament, you might say, that gives me a potential edge. And nothing is absent. There's no black and white. The best you have in this business is maybe. No different than the casinos. Maybe they'll extract the dollars from the gamblers, or maybe they'll pay. Maybe. So if the best you have is maybe, this is not a business of prediction. It's a business of maybe. So maybe this is too high, and maybe this is too low. Maybe we'll go further. Maybe we won't. Maybe these buyers that are up here are going to just continue. Maybe not. My seller is below the buyers. My buyers are here. Now I'm into order flow. Buyers are here. I see my icebergs. Those are limit orders. These guys are absorbing these buyers. But I don't know who's going to win. Think Pac-Man. Nice way to think of it, isn't it? Sellers are below the buyers. Is it going to change? Right here, if the buyers that are here absorb this guy, we're going to go up. Now I'm in micro. Just taking you into this, you could see how you kind of can put some pieces together. So the sellers are here, the buyers are here. Right now, these guys are under the bus. Thanks for playing. We're going to send you a coupon to the buffet. Buyers are above the sellers, going higher. This is sitting here. What's going to happen with the resting liquidity? Wish I knew. I'm not a fortune teller. Breakdown, sellers are here, the buyers are here. Who's going to win the skirmish? Now the buyers are here. So this is a fight. What is this? Consolidation. Where's the volume? It's right here. It's going to break one side or the other. You're going to say, Tom, that's really brilliant. I'm going to say, well, that's what I know. What do you know? I'm going to say, we both don't know. Okay. What happens here? Change. Where's my support? Where the buyers were in control over here. Now I got support. Now I got resistance. What happens here? Buyers. What happens with these guys? Sellers are under the bus. Buyers are under the bus. These guys on top of the volume got absorbed. Nice to know, isn't it? Hindsight's always 20/20. But that's all you got. When you see the behavior, now you know you can anticipate a bounce or breakthrough. We don't know that part. But if I see the rotation, now I know where my resistance is. That's a lot of verbiage to describe market mechanics. Why? Because that's how it works. Can we predict? No. What can we do? Anticipate locations of statistical behavior, and the market could just keep going, right? Or we observe the change and we narrate it. I focus on this in the Trader Lab because this is the language of the market. I don't use any indicators. Now, I'm not saying you can't, but what I found was all an indicator is doing for me is looking backwards and trying to interpret something, right? And they're conflicted because we typically load indicators on in this quest for certainty, which in an environment that there is no certainty. So if you don't have certainty, maybe the job is then not to create ambiguity and conflict, which is what most indicators provide you. Also winning trades, by the way, which is always I think is the bigger dilemma, because you can throw spaghetti at a wall, and if it actually hits the wall, if you take a long, it'll have winning trades. That can be your methodology. So, and I call it spaghetti because of all the lines and crossovers and different stuff. So I threw all it away. It was very hard for me to do that because I built systems and kind of grew up on indicators when they first became available. Just those of you real brief, those of you who don't know, I shared an office with George Lane. He created stochastics. So you might say I was there early on, with oscillators, and I thought that was the holy grail. And I built systems around derivative oscillators, a lot of other stuff, trading systems, because I was managing dollars. So I kind of went down this path of optimization and curve fitting, and I just thought and at the time systems were kind of a new idea, so I built systems. So everything, you think you're on the right path, and throw a few years under the belt, and then you keep waking up with Trader Groundhog Day, and I did a webinar on that. So anyway, right here, it's either going to break high or break low. So it breaks low, too high, and then support. Test. No bueno. See you later, alligator. Break low. What support becomes resistance? Can you see methodology here? And then where are we going? South of the border. Now, the way you might look at this, it's either a reversal trade or an exit. The variable in that is your trade plan. For some traders, it's just longs at this point, and they get taken out. Now, for me, subject to my plan, and my plan I'm not saying is a good plan, it's just a plan. One moment. Just seeing some debris. Okay, so this is either a long exit or a short, and it's all a function of your trade plan. If you're just trading longs for the squeeze and to fill the gap, you might not take the short. If you are running this 82% probability, then you might be taking the short here. And if you couldn't get in it here because it's too fast, either you wouldn't take the trade or you'd wait for another rotation for a short, and then it's still mean reversion. And what's the mean, you're going to ask me? Mean reversion is this, to come back here. So it's outside in trading. So the context went from directional, squeeze, to rotational. Don't know. It's so exciting because who can predict? So now let's look. Let me try to get this straightened out here. And I have data holes. Remember, if I drop out, I'll do my best to come back. Please give a like if you're in YouTube. If I break out in the sense of, I should say, the monkeys swing on the chandelier, that'll be it. So right here, we come to VWAP, and we come to previous support. This is now resistance, VHVN. So right in here, you got to decide, was that just a squeeze and that the extent of it? And are we going lower? Now, now we are directional. Where's our support? Our support is there. See it? Our resistance now is here. See it? Support, resistance. Now, this is sort of like ping pong. What's too high? What's too low? And what's underneath here? Another high volume area. Let's come back to the higher time frame. Now, I know you're going to say, I can't do this. You don't have to. You do pieces of it. You won't be able to do all of it until you get really skilled, but you only need to grab chunks. So, and this was the gap, right? So we came right up and didn't quite fill it. And then if we break below the first target, which was this, down around 22, 23-ish, and then we get below it, what's our next target? 20 or 19, this high volume area. Let's come back where the next targeting is. 19, right? So initially this was our targeting, and then we squeezed it the heck out of everybody. Then we come back down. If we can get below here, this is our next target. And that's in a higher time frame. When you get into microstructure, it's much, you got much more, you get a better ability to zero in on it. So too low, too high, VWAP and resistance. Possibility here to come back here. If we break this, then possibility to go there. So let's watch the behavior. And I know I got some gaps in data floating around. Too high, too low. Watch. Too high, too low. If you take a short, which I would, here, in alignment with that, because we failed at the overnight volume point of control, I'm looking to take out the early low, wherever that was, which I don't remember now, but I think it was around here, I think. So I'm looking to take it out. Why? Because now the longs have their sell stops. Remember, market goes up to go down, market goes down to go up. Isn't it logical? Data hole. Don't know what happened there. So here, this is my next area. So again, there's no precision. As you go down in time frame and fractal, you can get more precision. When you're in a broad stroke, like the higher time frame, you got less precision. It's just, an area. So this is the next area. So for me, this is a target area, and I don't know what happened over here. So I don't know. Hole in the data. Start yelling at the monkeys. They don't listen. Microstructure is here, too high. This targeting. You could be done with the trade here, or in TraderLab, you'd be monitoring and managing the trade with microstructure. So this, for example, this is resistance. Break low, too high, shopping. Right there, high volume. Now I break low. Where's my outside edge? Well, I know this is too high, and I have a hole in the data, so I can't tell you much about this, except this is my outside edge. These are distributions. What is a distribution? Too high, too low, too high, too low, retail. See you later, I'm not shopping here. Come down here, and then it's too high, too low, too high, too low, retail. And either I continue lower or I break high, and I reject the price. So this is kind of how this works. Auctions happen in all time frames and fractals, as you think of them, right? So what is this? Well, this was too high, right, at the time. There's the node. That's like our shoppers. Our shoppers in this, quote, time frame or fractal said, I'm not paying it. Get out of here. So now we come back to check the price. It's the outside edge of this consolidation. Let me just throw a line in here. I want to try to speed along. This is resistance. There's your volume. So this is your resistance area. Subject to your time frame, all we did is squeeze this here and come back to the area that was too high. And I have a variable high volume node over here. This is resistance. Now anything can happen, right? Part of the joy of maybe. Let's see. Resistance, support, resistance, come down, location. Now right here, you're either trailing your stop above here, you're subject to time frame, taking a short here with a stop there, subject to time frame. This is your target for a scale right there because it's high volume. Retail price down here because we came under it. The buyers were here. The retail is here. You'll notice we broke high. We tested the retail. We tested the retail here. Resistance, support. Short, where do we come? Back here. Scale. Now this, by the way, you might consider this, I don't know what the word scalping, define it for me. One person's scalp is another person's higher time frame trade. But this is a viable trade if it's part of your plan. If it's not part of your plan, it's trade management. And you're not taking a trade, you're managing a trade. This is part of TraderLab methodology. And what do we know here? Support. What do we know here? Resistance. What do we know here? Support. Break below support. Going to zero, Lewis. Okay, where's my resistance? I'm going to throw a little line in here for you. This is how I navigate. Not saying it's any good. Of course, the monkeys were swinging on the tree here. I think one of them slipped on a banana. So I had absorption here. I got below. I got resistance here. I got below. I got resistance here. Watch. I check here. Going to zero, right? See the structure. Not what will happen. See the structure. Data hole. pain in the you-know-what. This might be resistance. I have a hole in the data. I don't know if it traded above, so I'm just going to plead the Fifth Amendment, which means nolo contendere. I'm not guilty. I don't remember. And resistance. So what happens here? Support, microstructure, right there. Don't know. Resistance, right here. Don't know. Come down here. Microstructure here. Clueless. Break high. Out of the trade. Watch. Where's my support? Down here. IB. No clue. Watch. Now. Yeah, this was interesting. Actually, this was I narrated this in the lab, and this was a short. And I'm trying to. I don't know if that was a piece of news or what happened. It just really threw me off. Are you guys tracking? Yeah, thanks, C Money. I can't look at that now, but thanks for posting that. If you're in Trader Lab, guys, compare that data with the data hole I had, because I don't know what happened there. So I was looking at this as a potential short right here, because we came outside and I was looking for mean reversion. I mean, to come back here. So right here would be a stop for me. And this was like, what's that? I was looking for news. I never found any. So I don't know what was going on there. Totally going, what? Did you ever do that? What was that? So this is a big sweep. Absorption was here. All these icebergs sold into this. And this was just a explosion. You know, I don't know. Somebody must have tripped over to court at the CME. I don't know what happened there. You know, it's like one of those things you go, oh, well, that's what protective stops are for. Put a trade on, take a stop, scratch your head and go, what? Now what do we have? The IB. Now I'm going to take you in a structured trade. At first hour high or low, it's called the initial balance. And there's a high probability, if you remember, let's go back to the stats at the top of the stream. When you open lower outside of range, the probability of taking out the first hour's high is 67% probability. How exciting. 85% probability of taking out that. So we accomplished that. Filling the gap, if you remember, 64%. So we're trying to get in alignment. But we have no clue. At least I don't. If you, like I say, you know, come on, bring it. So here I take out at 9. Actually, it was. Yeah. This is the first hour's high. And we break it here. This sets up something called the IB continuation trade. Now, this is a really nasty spot to take a trade, but it's a structured trade, and you have to decide in your plan whether or not you take it. Let's assume we take it, okay? The way this trade works is we broke above the highest volume from the ETH. Remember, it's a high probability target, and so is filling the gap, right? So, and this has high probability to take this out. If I break above it, it sets up, there's two trades in the Trader Lab. One's called the IB continuation trade, but remember, when we broke through it, we filled the gap. And I think I posted in Trader Lab, I can't remember, that, wear a helmet on this. You got this. Now let's watch. So the IB is here, right there. And it, let me just go back a little bit. So when you're looking at this, right where this happens, here's liquidity. We blow through it. And this sets up another structure. This is an advanced potential location based on the collision of liquidity, absorption, and icebergs. And it's really, there's a name for it. It's called more business. It's a more business trade. You can learn this in Trader Lab, and it's very advanced. What it is there's more business. So when the market comes back around, if we check this area, it can be a long, and it aligns with something called the IB continuation trade. The other piece is you're over the highest volume in the ETH, and think this in fractals. If this, as an example, was resistance, highest volume in the microstructure, if we take the lens out, and this is the highest volume in the ETH, and we go above it, isn't it the same? to check it, maybe, and now you have the IB for the long. So anyway, there's a number of complex pieces. You put them together, you can vet this in TraderLab. Let's watch the behavior. Location, location, location. This is a trigger right in here, right here in the TraderLab. Now it can do the following. It can break here. It can come here. This is your support. It can just do whatever right here. Here's the break high. This is a potential long in here if you want it. And stop would be here. And the statistic overnight mid, and this is where statistics come in, and also randomness has about a 68% probability. Support's here. See it? So the way this would work is you could get long. Your stop's got to be under here. You could wait for the pullback to the structure. This is advanced trading in TraderLab. You can learn this, but guys, if you're looking for quick and easy, you'll understand why most retail traders don't succeed in this business. It doesn't exist, in my opinion. And believe me, I spent years looking for that. You know, the holy grail, just the one thing you need. Go out on the internet and ask yourself, why do all these quote experts tell you the only one thing you need, and it's this and it's that? I think that's, well, you answer the question. I already got my answer. This is a structured trade in TraderLab. Advanced. The resistance now is here. Let's look. I'm taking you down into something advanced. So support, entry, stop here or stop under here, or this is micro breakout. This is your micro high volume. I'm going to take you down as far as you want to go. You can learn this in TraderLab. What am I doing? I'm reading the language of the participants. There's no indicators here. I don't have time for an indicator of the conflict or looking at multiple time frames. What time frame am I trading? If you think I'm trading fractals, there's no clock, there's no time. I'm trading what happened here, not something wherever. You know, what does that have to do with this? That's what order flow is about. What happened? Do you know what happened here? I do. Do I know what will happen next? No. Do you? No. So there. That's not criticism. It's 45 years of trading experience. That's what I figured out. And I spent most of those years trying to get certain, trying to predict, because I thought that's what this was. Being able to predict what's going to happen. Let me ask you this question. Do the casinos predict what's going to happen? Do the casinos predict what's going to come out? What kind of cards are going to come out of the deck, or how the gamblers play the cards? They don't. They can't. Do you think they might have figured it out by now? You see what I mean? Resistance. Let's watch. Resistance. Let's watch. Support. Hasta la vista. Thanks for playing. Let's get the coupon and we'll all meet at the buffet. How we doing, guys? Adil, I don't use gamma levels in my trading. I don't need them. I think I'm more of a minimalist, because anything I add to process does not necessarily create certainty. It creates conflict. I'm just a believer in, I'm a minimalist. I came from the other direction. I thought more was better, you know. So I've kind of run to the other side of the boat. I don't need a gamma level. It's like saying it's going to do X. Well, it's not necessarily going to do anything. Now, if a gamma level is sitting right here, that's great, you know. But what about if it's sitting up there? How does that? What do I do with it? So I'm going to say is, yeah, I've looked at gamma levels. I've everything that's out there but the kitchen sink. I don't need them for my trader. So I don't use them. So I hope that answers you. I'm not saying, you know what the answer really lies? The answer is not complicated. The answer is what gives you a statistical edge. So if gamma levels are incorporated into your process and it gives you an edge versus not using a gamma level statistically, not anything else, not how you feel about it, not about the random, you know, interaction of these processing. It's no different, like let's call Fibonacci as an example. Sometimes you get a 50% retracement. Sometimes it's a 68% retracement. Sometimes you get a 1.5 extension, and it works. So now you think Fibonacci's are good for, quote, looking for locations. What happens if you prioritize that input versus what's right in front of you with the mechanics of the current behavior? That's kind of where I came to with all these things. And I've done all those things. You know, it doesn't matter. If you think of it, I've probably done it. Actually, here's something I want to show you guys. I find this very interesting. Let me see if I can do this. Just this to me says it all. No, I can't move this. Maybe I can, maybe I can't. Darn it. All right. I wanted to try to show you, I can't move this window, sorry. It's technical indicators, and it says, you know, choose one. I think there's maybe 200 or so in my Investor RT indicators. Things like Williams-Fazenda, Woody CCI, Zigzag, value area, vertical reference line. Well, you don't need that. Trade smoothing, trend tool RTX, trend intensity index, trend detection, trend continuation factor, trade view, trade dots, trade bubbles, TLB oscillator, time and sales, time series forecast. I can go on and on. Stochastics, statistics, spread matrix, slope wave, sine wave, signal marker, sine session statistics, parabolic, RSI, risk reward, reverse engineer, Renko, relative slope, you get the idea? Relative vigor index. What do you think? There's a good one. And that's just the R's. So the point I want to make is you can spend your life going down the yellow brick road to nowhere. And why do all those indicators exist? Now, you asked me about gamma. I'd see it as just another piece, another tool. And where's the answer? The answer is what gives you a statistical edge. I'm telling you, the magic 8 ball sometimes called it better than we did on the trade desk. Same thing, right? Just something to think about. So here we have resistance. No clue. Remember, support, resistance. So when I'm in this scenario, and remember the problem with the trade, long gap fill, growl. And this is what turns out. So right here is a long, you know, and this is okay. You take a long, but you're going to get taken out of it. And you don't know. If I take a long on this pullback for the IB continuation, I already know in the Trader Lab that I got resistance here. So I have the buyers here, I got the sellers here. I got the buyers here, I got the sellers here. If I'm getting long, I'm scaling. If it doesn't fit, I'm not doing anything. I'm just going to let it go. When I break below this, there, now the long is over, and I have something called the IBF. The IBF is a mean reversion trade, underscoring the word mean, and now it's come back to the other side. Let's look at this. Structured trade and Trader Lab. Let me show it to you. Where was the VPOC, guys? Can't remember. You know, my data's messed up, guys. Do you know where the VPOC was at the time when we had the IBF, this short here? Uh, 2375 was down here. Really? Is that right? So the IBF, we had 2375 was developing volume point of control. Is that a yay? Yeah, hi, Ferris. When you say you're new, can this thing go with it? Yes, this is auction market theory. This is actually how the market works. Discord, I just want to confirm the IBF, we had the developing volume point of control 2375. Just give me a yes. Yes. Okay, very good. Thank you. This trade here, this short, this is a short, and the objective was to come to 2375. Now, it's a structured trade in Trader Lab, and I will answer your question in a moment, Ferris. Once we are short, the sequence of targeting is the following: mid, VWAP, VPOC, and developing value area low. That's kind of it, and maybe fall out the bottom, you know. So if you took a short here, you're going for, and I don't know where everything was. I think this is where you're going. So what you do in Trader Lab is you get risk neutral, job number one, and then you're looking for the longs to get taken out. Remember, the market rotates. So I don't know where we got to down here, and I assume you'd get taken out of this trade after scaling, and you'd either, with trade management, you'd put some in the bank, or you'd scratch the trade, subject to your plan. So we come down, and now I don't know what's going on here. I haven't seen any of this since I started streaming at 10:30. How are we doing on the clock? Okay, let's see. Oh, VPOC migration. This is an important element right here. Now, this is your resistance. We have a high probability of getting here if we clear this. So now we're in two-sided trade. Now, let me come back here and try to look at this. See if there was anything going on here. Yeah, this becomes really two-sided here. This is your resistance, remember? This is where we were setting up our short, I think. Let me just make sure I'm at the right place. Yeah. So we come up, we take the stops out, we see absorption here. This is your high volume. That was resistance. Correct me if I'm wrong. Break high, break low. Outside edges there. That's potential short, but you're only trading rotations. For me, this is just very muddy. I find, for me, I like, and I'm only talking me, the large rotations, not to get into this kind of stuff. I don't want to trade this. I want to try to get this. So if I'm going to get this, I'm going to be trading here. Because this is, here, let's look at this. Just, you'll see what I'm talking about. This is a consolidation. And it's this. High volume is there. So if I chop, buyers are here, and I have my sellers below, that means the buyers here are under the bus and the sellers are in control. So when I come back here, this is resistance, that is resistance. So I can sell this, and then I have to look where support was. And I think support was here, and here. So this becomes resistance. This is support. Resistance. You see how this might work? And we fell out of this distribution, and we fell out of this. This is a fractal, so this is they're all inside each other. That's a larger. And this is the outside edge of all of this. The outside edge of this is there. So I got the same little thing here, and then if I open it up to a slightly higher fractal or time frame, it's the same thing here. Low volume. Outside edges, low volume. High volume, low volume. Outside edge, too high, break low. Now I'm below this one. And if I combine this with that volume, I'm out here. Resistance. If I break under there, I now have resistance here. Volume is there. Break low. Now we get this yellow line coming up. This is called VPOC migration. This is a key event. Now let's go to we're talking fractals. What happened? What does this mean? What it says is, this is the highest volume for the day, and it's called in the developing daily time frame. For the whole day, right here is your retail price. So when I'm looking at these short time frames, it's the same thing, but it's only measuring the volume in here. I can use these. So if this is too high, I can fade it and short it. But if this for the whole day shifts up, what does that say? Maybe, and that's all you got, this is the new retail price. What's below me now is too low. And maybe if this becomes too low, I'm going to come back and check what was too high. So let's just see what it does. There it is. So this, think of it this way. If this is too high and I break away from it and I come back and it's too high, I can do this. If what's below me is too low and this shifts up, is this now too high and I continue lower, or do I cross above it and now it's too low and I come back to test what was too high and maybe go higher? Remember, I have a high probability target, and again, it's all random, so let's not try to go, we know what's going to happen. It's a 68% probability to get here. And to get there, I've got to get through this low volume, and I got to clear this. So if you got long in here, here's the thing about trade plans and trade management and all this. Your job's not to be playing a video game. Your job's to know where your trade is. You might not have a trade here, so you just be sitting here working on your crochet. This is resistance. Probability is to get here. And we have to get through this. These sellers that were out here, we got to get through them and squeeze out the stops here to go there. Hope that makes sense. Now, to answer your question, Ferris, this is called auction market theory. This is how all markets operate. And it's a basis of what's too high, what's too low, what's retail, like going to the store. All of these fractals, like this, is like a store. I think of them like this is shopping. This is what trading is. What's too high, what's too low, what's fair. And if it becomes unfair and the shoppers leave the store, then it's too high. It becomes resistance. If I break away from it, we're all getting in the car and potentially driving back to the lower price store, wherever that is. You see? So this is happening in all time frames and fractals. And the idea of this, I don't use indicators. What's really going on here is we're drilling down into what really creates the market. That's the participant behavior. All our indicators are derivatives of looking backwards at a price, some derivative of price, whether it's an oscillate, it doesn't matter what it is, because that's all it is. And then we try to do multiple time frames. So what do you do when the market, let's say your multiple time frame thing is saying long, but right here is a short. And by the time your shorter term, let's say stochastic or MACD or something, tells you to get short, the market's here. Where do you get short? Me, I get short here. Where do I look to get long? Well, I maybe cover as soon as I hold this and I'm over here, I'm out. Where's my next short? I'm going to be looking up here. Can I trade in this? Yeah, I can. Do I want to? Subject to trade plan. See? So yes, to answer your question, number one, anybody can learn this. Is it quick? Nope. This is like going to graduate school for trading. That's really what this is. There's no shortcut. There's no holy grail. Everybody's looking for easy. If it was easy, we'd all have ATMs in the basement. We don't. You can take this, though, Ferris, and you can apply this to any market, but you have to vet the market. In other words, you got to take an understanding of how the market works, why it does what it does, and how at times you can get in alignment with it. And then you are waiting for the trade. Everything, all the work is done outside. None of the work is done here. You bring the result of your work and your research to the trade, to trading. You don't play it. This is not a video game. It's a business. So the idea is approach this like a business. What does a potential developing trader need in order to be able to operate and have a statistical edge? You have to build it. Trader Lab gives you the tools and the support and examples of the process. The problem we have in the retail space is we're operating in a random environment. Anything can happen at any time. It's completely uncertain. Our psychology is wired to look for certainty, what we need to understand is it doesn't exist. What does exist is what these participants said about price. And where is the outside edge? Let's just look. It's right here. So if I know this is a store and the shoppers get in a car, leave the store, and I return to the store, and now it's still too expensive, and I see my sellers here and here, this is a potential short back to here. Or not. I say or not because if it's not a trade plan and vetted with a statistical edge, then there's nothing going on here. But let's see how the auction works. Let's see if we come here. This is not a trade recommendation. Here's what's important about this. assuming this is a reversion trade. Coming back here is reversion from here to here. If this is too high, we can revert from there to there. It's all inside of each other. It's called trading in fractals. Now, I don't have a trade here, but I have behavior. I see this behavior all over the place, and I anticipate it because I understand why. It's not because an indicator crossed over. It's because of what this says. This is a language. And this is like learning a foreign language. And the thing about the language is we can interpret what might happen. We can't predict what will happen. But if I know why this happened, if I come back to a level, why did it happen? Because these buyers were absorbed by these sellers. If I come back to a level that the sellers thought was a good price to sell at, and we already rejected this as too high, might I anticipate underline selling here? And if I get my selling, is this a short? And where might I come back? The highest retail price, which is here. That's called mean reversion. Now I'm in multiple time frames. So can you learn this? Yes. Is it going to be quick? No. Are you looking for a shortcut? Wrong business. What do most retail traders do? My opinion only, not a recommendation. Don't do it. Because the statistics are horrendous for what most retail traders do. They're all doing the same thing. Why are they getting the same result? Because they're doing the same thing. This requires something different, in my opinion, to create a career in this business. You really got to step back and say, okay, I want to compete at the highest level against some of the brilliant people on the planet. I work with guys at hedge funds. I have a friend of mine, he managed over $1.5 billion. What do you think he's doing? Not what other retail traders do. Guess what he uses in part of what he does, in spite of everything? This. Can you learn something from that? That's all I can ask. And does it mean you'll be successful? Absolutely not. If that was the case, we'd have a little printing press here, but we don't. What we have is statistical probabilities, not getting involved unless you have a statistical edge, understanding you have no control over the outcome of any individual trade. The only thing you control is yourself. How do you get control over your emotions, and this is all counterintuitive to our wiring? Statistics, probabilities, developing discipline, understanding the forces that work against you that are really primal based on your reptilian brain to run away from risk. We are running into the burning building. We are not avoiding it. Yet our psychology screams to look for certainty and to avoid the burning building. Isn't that logical? How do you deal with that? Well, you can learn that in Trader Lab. Rambo, I cannot narrate that now. I'm sorry. So anyway, that's the Trader Lab, guys. That's what we do. It's a community of like-minded traders who come together to leverage their collective experience. Our senior trader has over 50 years experience. I have 45, both professionally and otherwise. And I've walked in your shoes. Anybody who's in the Trader Lab has done exactly what you've done. The difference is they've determined that it doesn't work. It works randomly. That's the catch-22. Everything works. Throw the spaghetti against the wall, some of it sticks. And that's what keeps us looking for certainty in making something that's defective work consistently. And that is the fallacy, I think, because that's what I thought when I built systems. And what is a system? It's something, an organized bunch of data points or processes that you can optimize. Another term for curve fitting. When you're going and looking back over the last couple days or weeks, and you look at all the trades you could have had, and then you get your screwdriver out and tweak those indicators, you're just doing something that I did, except I did it on steroids using system design, code, and optimization processes. Look back, walk forward testing, all that. You're kind of doing the same thing, except maybe not as intensely as I did, but your result's the same. If that's not working for you, then maybe you might want to visit the Trader Lab, and there's no cost. If you're in YouTube, there's a link in the bottom of YouTube. You can click that. You do have to verify your Discord username, make sure, and email to make sure you're not spam. That's all there is to it. There's no cost. And then you can take advantage of all the education in the Bookmap Discord Trader Lab community, stocks, options, crypto, order flow, market maker behavior, algorithmic behavior, and a lot more. Also, I have to remind you, because I think this is something that you might not want to miss out on, that if you're interested, if you're a subscriber to Bookmap, that the market by order, which is stops, icebergs, all of that, and MBO is the tag data from the CME, so you know whether or not you're looking at a stop, a limit order, a market order, an iceberg. 50% off for the first month. I haven't seen them do this before. Hope they do it again. Also, if you're in YouTube, there's a library here of 60 PDFs of structured trades, exactly what you're seeing me talk about here in the stream. These are actual trades I took. Others are just screenshots. I'm not a vendor. There's no cost. I'm just sharing. Traders were asking me, "What are you doing?" I said, "Well, here's what I'm doing. Here's why." And there was so much interest in it. Bookmap asked me if I'd be willing to stream, help other traders. There's a lot more going on. Bunch of potential, professional streamers, other educators in Bookmap. There's not one way to trade. You got to find what speaks to you, really. And that's pretty much what this is all about. If you're visiting in YouTube, remember, please give a like, a thumb up. It's very helpful. We like to see the likes. We like to see the likes, and so does Bookmap. Lets them know you're getting some benefit from this and whether or not I should continue doing the stream. If I don't get likes, then I think maybe this is not something I should continue. So if you think you're getting value from this, please give the thumb up. Also, if you're interested in these streams and others like it, there's a vast library that I've done of streams that are available exclusively in the Bookmap Discord Trader Lab community that you can watch and educate yourself on this and make it your own. There's no basically plug and play. What there is what can you relate to? Remember, this is a language of participant behavior. The closer you can get to the participant behavior, the more, and you understand order flow, the more you can compress the time it takes you to interact, maybe better manage your risk, maybe understand the statistical probabilities that we use in the Trader Lab, maybe have a better outcome. And of course, past performance is never indicative of future results, but the way you find out is you come to Trader Lab, check it out. Okay? Thanks so much for visiting today. Remember, we're here for you. If you're interested in the business of trading, that's a Trader Lab, and it's definitely an advanced process. If you want to get an advanced education in trading, remember, Trader Lab is here for you. It is not for everybody, and I look forward to seeing you guys tomorrow. Come to Trader Lab, and guys, Trader Lab, hold on, I'll be with you shortly where I will continue narration of the story. Thumb up, please, on YouTube on the way out. By the way, remember Trader Lab, you'll be able to review the stream. I don't make them public. So if you're in Discord, you'll get a link for this. If you're in YouTube, click the link in the bottom of YouTube. Come to the Bookmap Discord Trader Lab community so you can have access to all these resources. And again, there is no cost. And also, if you want to stick your toe in the water with Bookmap and you haven't tried it, go to Bookmap